Hello, and welcome to Explain the Charts, your go-to channel for detailed technical and fundamental analysis. Today is November 5th, 2025, and we are diving deep into Alphabet, ticker symbol Google. The stock has been on an absolute tear, and there is a massive amount of news driving this price action. First, let's break down the fundamental catalysts, which have been overwhelmingly positive. Google's parent company, Alphabet, reported spectacular third-quarter earnings that crushed Wall Street expectations. Earnings per share came in at $2.87, soaring past the estimated $2.26, while revenue climbed 16% to over $102 billion, also beating projections. This wasn't just a small beat, it was a blowout performance with strong growth across all key segments. Internet search advertising, cloud computing, and YouTube ad revenue all accelerated and surpassed analyst estimates. The market reacted immediately and explosively to this report. Adding to the bullish sentiment, the AI narrative for Google is stronger than ever. The company is heavily investing in its AI cloud infrastructure and its Gemini family of AI models. Features like AI Overviews and AI Mode are reportedly driving search query growth, especially among younger demographics. Google Cloud's order backlog also saw an incredible 82% year-over-year jump to $155 billion, signaling massive future revenue. Analysts are taking note, with Morgan Stanley forecasting over 50% revenue growth for Google Cloud by 2026 and KeyBank raising their price target to an ambitious $300. Furthermore, Google received a favorable outcome in its search antitrust case, with a judge ruling that no major asset divestitures would be required. While some data sharing is required, investors largely cheered this news as it removes a significant overhang of uncertainty. Now, it's not all one-sided. Some bearish points to consider are an already elevated valuation after a 38% rally in Q3, insider selling, and rising competition in the AI space from players like OpenAI. But overall, the news sentiment is extremely positive, with a huge volume of articles this week confirming that all eyes are on Google. Now, let's switch over to the charts and see how this powerful fundamental story is reflected in the price action. Looking at the daily chart for Google, we can see a clear and powerful uptrend that has been in place for most of the year. There have been pullbacks, like the one in early April that found a bottom near $140 and another sharp drop in September. However, the most significant feature on this chart is the massive event that occurred at the end of October. Let's zoom in on that period specifically to get a better look. Here we can see the direct impact of that blockbuster earnings report released on October 29th. The stock closed around $267 on October 28th and then gapped up to open at an incredible $291.59 the next day. This move created an all-time high for the stock. That high of $291.59 is now our primary and most important resistance level to watch. Any long-term bullish continuation will need to decisively break and hold above this price. Following that initial spike, we saw significant profit-taking, which is completely normal after such a massive one-day move, bringing the price back down to close around $281. This price action has created a massive gap on the daily chart, which now serves as a critical support zone. The top of this gap is the October 29th high of roughly $275, and the bottom is the October 27th close near $269. This $269 to $275 zone is now the key area for bulls to defend. A close below this gap would be a very bearish signal, suggesting the rally has run out of steam and sellers have taken control. For now, the price is consolidating above this gap, which is a constructive and bullish sign. Yesterday, the stock closed at $277.54, right within this crucial support area, showing that buyers are stepping in to defend this level. If this support zone fails, the next major area of support would be the highs from September, right around the $256 level. Let's move to a shorter time frame to analyze the current consolidation. On the 1-hour chart, we get a clearer picture of the price action since the earnings report. You can see the huge spike to the all-time high, the immediate sell-off, and then the establishment of a trading range. The price has been bouncing between roughly $276 on the low end and $286 on the high end. This shows a period of equilibrium where buyers and sellers are battling for control after the massive volatility. A break above this hourly range, particularly above $286, could signal the next leg up towards the all-time high. Conversely, a break below $276 would be the first warning sign that the larger gap support on the daily chart is at risk. For day traders, these hourly range boundaries are the key short-term levels to trade against. Now, let's look at the 15-minute chart for the absolute latest price action. The 15-minute chart shows the trading from yesterday, November 4th, and into the pre-market session today. We can see the price chopped around yesterday, eventually closing near the lows of the session at $277.54. In the pre-market, it has drifted down slightly, indicating a potentially soft open for today's session. This very short-term view reinforces the importance of the $276 to $277 support area. Traders will be watching closely at the market open to see if buyers step in to defend this zone again, or if sellers can push the price lower. Volume at the open will be a key indicator of conviction in either direction. So, to recap the key takeaways from our analysis. The fundamental picture for Google is exceptionally strong, driven by stellar earnings and a powerful AI growth narrative. This has propelled the stock to a new all-time high of $291.59, which is now the key resistance level. The most critical support zone is the post-earnings gap between $269 and $275. As long as the price remains above this zone, the outlook is bullish and the stock is likely building energy for another attempt at the highs. So, let's talk about potential scenarios. I believe the bullish scenario, where Google holds the gap support and eventually retests the $291.59 high, has a high probability, around 70%. The overwhelming fundamental strength and positive analyst sentiment support this view. A breakout above the all-time high would open the door to the psychological $300 level, which aligns with some of the new analyst price targets. The bearish scenario, which I see as having a 30% probability, would be triggered by a decisive daily close below $269. This would signal that the gap is being filled, a technically weak sign, and could lead to a deeper correction towards the next support at $256. This outcome would become more likely with negative macroeconomic news or if sentiment around AI competition starts to shift against Google. The main thing to watch for in the coming days is whether buyers continue to defend the $275 to $276 level on any dips. Their ability to hold this line will determine the short-term direction of the stock. That's our in-depth look at Google. As always, please remember that this is for informational purposes only and is not financial advice. You should always do your own research and make investment decisions based on your own risk tolerance and financial goals. Thanks for watching Explain the Charts, and we'll see you in the next video.